welcome you tonight for our discussion about global inequality. And I also welcome everybody online because there's a live stream and you all will also be able to watch the event afterhand as a recap. I'm Karl Mühlbach, founder and managing director of Fiscal Future, an organization of young economists for future fit financial policy, and I'm going to moderate tonight's discussion. We still got the free seats, please come here up to the front. And let me firstly introduce our host, Dr. Andreas Bovenschulte, who's serving as governor of the state of Bremen since 2019, and also currently assumes as president of the German Federal Chamber, the Bundesrat, and this is also an invite provided by the Federal Chamber, so thanks for this. And given that Bremen is truly an open-minded state, it was always possible to look beyond its own horizons. And thus, Dr. Bovenschulte noted the recent report on global inequality, which Joost Stieglitz led for the South African G20 presidency. And, well, Dr. Bovenschulte was eager to also discuss the report here in Germany. And therefore, I am extremely glad that Professor Joseph Stieglitz followed his invitation and that I'm able to welcome him to Berlin tonight. Welcome to Berlin, Professor Stieglitz. He is one of the world's most influential economists and public intellectuals, and over more than 5 decades, his work has fundamentally shaped how we understand markets, globalization, development, and above all, also inequality. He's a Nobel Prize winning economist, a former chief economist of the World Bank, economic advisor under former President Clinton, and the author of numerous landmark books on the global economy. He argues, and that is really important for today's topic, that inequality is not an inevitable byproduct of economic progress, but rather the result of political choices, institutional structures, and in his words, the rule of the game. His recent work, The Origins of Inequality and Policies to Contain It from last year, brings together decades of research into a comprehensive framework for understanding how inequality is produced, reinforced, and potentially reversed, both within countries and globally. And the current moment is marked by geopolitical fragmentation, technological disruptions, by the climate crisis, and also by a growing concentration of wealth and resources and power. Therefore, Professor Stieglitz has led a aforementioned report on inequality for the South African G20 presidency. And he argues in the report that inequality should be treated as a global challenge requiring international coordination comparable in ambition to the world's response to climate change. So this is really a groundbreaking thesis we're going to discuss tonight. And we are therefore extremely fortunate to have him here tonight with us today to discuss not only the causes of global inequality, but also what governments, institutions, and societies can realistically do to confront it. We're going to have a moderated discussion for like half of the time, more or less, and then we are also be possible to include questions from the audience to our great panelists. And I've said many words. I'm going to start into the topics directly. Professor Stieglitz, you're considering inequality as one of the defining global challenges of our time. Do we have such a big problem with inequality?
Yes, we do, and it's having a major, profound effect, not only on the economy, but also on our politics, on our society more broadly. If you look across the countries in the world, in most of the countries, there's been significant increases of inequality. It's not only a measure like the Gini coefficient. It's the extremes of inequality. The picture of Donald Trump at the inauguration surrounded by the oligarchs gave a picture of who was running America. The pictures of people at the bottom who are struggling to get by are also so telling. And it's not only within countries, it's between countries. The fact that it's so pervasive in our global economy is why we argued that there ought to be an international panel on inequality, that there was something going on that needed scientific assessment, evidence, research. And just like the IPCC that I actually was fortunate to serve on back in the early 90s, just like the IPCC helped bring the scientific evidence that climate change was real, what was driving it, what could be done, what were the impacts, what could be done about it. Our idea is that this would be a parallel kind of thing where we would try to identify, assess the research on what was happening to inequality in all of the dimensions. I talk about the top, the bottom, the evisceration of the middle, how it's related to the multiple dimensions like equality of opportunity, access to justice, wealth inequality, access to health, all the dimensions. So if you can understand what was going on, what were the drivers, what were the impacts, and what could be done. It was really conceived very parallel to the IPCC.
Maybe a quick following up question, because within the German government there are not so much discussions about how to reduce inequality at the moment, but we've had 5 years of economic stagnation. And it's like one of the main priorities of our federal government to boost the economic growth. When I studied economics, I learned that inequality is beneficial for growth and that redistribution hampers inequality. But in your books and your reports, you're saying that reducing inequality could actually boost economic growth. Why is that so? And why is this old idea that also I learned that redistribution would be bad for economic growth? Why is it still so persistent?
Yeah, so the old idea was called, Arthur Okun, who was chairman of the Council of Economic Advisors under President Johnson, wrote an influential book called The Big Trade-Off. And he argued that if you wanted to get more equality, you'd have to give up economic performance in some dimension. What we realize today is that's not true. And even places, these are not left-wing places like the IMF, agree with me, or the OECD, the World Bank. There's been a very big change in perspective. Let me just illustrate some of the reasons for this. One of them is the way inequality is created. I mentioned before the oligarchs sitting around Trump. Most of them have gotten at least part of their wealth from exploitation of market power. The tech giants have all been accused, convicted of abuses of market power in every continent around the world. And we know from standard economic theory, exploitation, monopoly power reduces economic performance and actually even impedes innovation. A second aspect of this is that at the bottom, if you don't invest in children, they're not going to be able to live up to their potential. And you're wasting, you might say, your most important resources, your human resources. Well, if you rely just on markets, you won't get adequate levels of investment. And unfortunately today, there's a lot of inequality in access to education, health, and even nutrition, so that those at the bottom aren't getting the resources they need while they're young to live up to their potential. So if you, in a concerted way, made a bigger effort to address these, you might call them childhood deprivations, you would have a better functioning economy.
So that was a very insightful explanation on the adverse and the cruel consequences of inequality as well. And now I wonder if you talk about things such as malnutrition and stuff. We're here in Germany, in a really rich country, in Berlin, like in this year rich city already, and Mr. Bovenschulte or Dr. Bovenschulte, you chose to make inequality a topic within your presidency of the German Federal Chamber. Professor Stieglitz just described inequality as a global challenge. Is it also, how is the level and the state of inequality in Germany? Is it also defining national challenges in your point of view? And what are the most pressing issues when you think about inequality in Germany?
Yeah, thank you very much. Of course, it is also a topic in Germany, but let me first of all say, dear Joe Stieglitz, that's a very great honor for me to be discussing this topic with you. I don't think that I can add on a scientific level anything to your insights, but maybe discussing how the practical consequences are here in Germany relate to the importance of the topic on an international basis. Obviously, Germany is, compared on a worldwide scale, not the most unequal country because well, my wife lived for a couple of years in South Africa. I've been there quite a few times, and then you can experience what real inequality is, even if you dig deeper into a society and not only as a tourist. But nevertheless, inequality is also a topic in Germany. And first of all, if we think about inequality, we tend to think about poverty. Because that's the first thing we say, well, there we have poverty and we have parts of our cities that are poor and other parts that are rich. And if we look at it from an intuitive point of view, we tend to look at it as a problem of poverty, not so much as a problem of inequality. But then if the discussion goes any further, we see that it's not only a problem of poverty, of people not having as much resources as they need, but actually the real influence inequality has, for example, on the democratic system. And that is a point that becomes ever more important in the discussion about inequality, that inequality is actually destroying the basis of a healthy democracy. It's not a very new thought. Rousseau, for example, said you can only have real democracy if you have a more or less equal social and economic base. But as long as the problem of inequality doesn't become too big, then the adverse effects on democracy are not that visible. But when it becomes very big, and after a certain point, then we see how much more political influence people with money have, that they are able to give large donations, that they are able to buy media, news, for example, and all these kinds of things. So that is something that is happening in Germany as well at the moment, maybe not as strongly as in the States at the moment, but it still is happening, the refeudalization of politics as a consequence of economic inequality. Now, the figures, if we talk about them, they are clear. The 10% richest in Germany own 60% of all wealth, and the 50% poorest own 2% of all wealth. And if it comes to the distribution of income, it's a bit better. The richest 10% own about 36 to 40% of all income per year, and the poorest 50% about 15 to 20%. So that's a bit better, but still it shows how big inequality is in Germany, and all the effects you describe, you can detect them in Germany as well. The bad influence on democracy, and of course on economic growth and on the cohesion of society.
So maybe we don't have these really impressive pictures of the oligarchs sitting around Trump, because our billionaires tend to be a little bit more shy. But Dr. Bovenschulte, you presented us with a figure. I mean, you said inequality is more than just poverty. We need to look at the concentration of wealth and power. And I've got a question for you, Professor Stieglitz, because I'm a little bit worried, because I've also learned that wealth inequality reinforces itself. If I've got €1 million and let's assume a rate of return of 5%, I get annually €50,000 without having to work a single hour for it, more or less. €50,000 is more or less the median full-time income of an employee in Germany. So it's what the normal person works for within a year. So if we've got billionaires, it's not 50,000, but €50 million annually as income. And my question for you is, when there's such a strong self-perpetuating dynamics of wealth inequality, like, is it even possible to reduce inequality, and aren't we just powerless with these kind of dynamics?
Well, yes, it is possible. As you began your remarks, you talked about inequality being a choice. One aspect of that choice is the tax system. And one of the things that Donald Trump did was to lower the tax on the billionaires, as if they needed it desperately, and take away health care for the middle class and for lower income people to pay for a tax cut for billionaires. Now, one of the advantages of being a billionaire, this is a hearsay, but but it's in the data, is that the people at the top actually pay a lower rate than those down below. And what does that mean? That means that if they save their money, it compounds at a higher rate. They're getting a higher rate of return. Partly they may have monopoly power that gives them that, but in addition to that, they're not taxed on it. And when you have a lot of money like that, you have the ability to buy the most expensive tax lawyers and to lobby. You were talking about campaign contributions. One, we were at Davos with a meeting where one of the senators was talking about why he likes the idea of campaign contributions, investments, because he says, those people who give me money want to be sure they get a return for it. So it was like, it was blatant, open that, when people make these contributions, these are not charitable contributions. These are investments. These are investments for which they expect a return, and they track whether they do get a return. So that's one way that we can do it, try to prevent this plutocracy. One of the disturbing statistics in our G20 report was that it is expected that over the next 10 years, $70 trillion will be passed from one generation to the next among the very rich. And so unless we do something about that, we are in the process of creating this inherited plutocracy.
So luckily in Germany, the rules on donations to political parties and candidates are a little bit stricter, but they're still it could be more ambitious as well. But you talked about, your first answer was how the tax system may be able to influence, to shape, and also to reduce inequality. And you also talked about that 70 trillion of US dollars are going to be passed to future generations, and therefore I'm going to ask you a question about the tax system, because for me it is really clear what would like the arguments of Joe Stiglitz would imply. It is also written in the report for the G20 presidency that to counter the rising inequality, it is advised to create tax system and tax schedules more progressively, but currently, we are not having so much a debate about inheritance and inheritance tax. We had at the beginning of the year with the Social Democratic Party yielding a proposal, but at the moment the federal government is rather discussing about reducing the income tax. And while within the coalition agreement it is stated that for those with low or middle income, there are current discussions on whether high-income individuals should also face a lower tax rate. Dr. Bovenschulte, what do you make of the current discussions, and within this world of a rising inequality within like an economy where right now in Germany more than half of wealth is not has not been worked for by the people itself, by the person itself, but has been inherited? What would you propose, or also what did you propose in the past to the federal chamber when it comes to the German national tax system?
Mm-hmm. I come to the tax policy in a minute, but let me first present my firm belief that what you don't get right on the primary level of distribution, the distribution of market income, you are not able to fix on the secondary level with tax policy, although tax policy is very important. But the first level we have to think about is the distribution of market income, the primary distribution. And if you don't get things right there, you really have a hard time to have a good tax policy and to get the results you want to have. So what we need, first of all, is a system of labor and work relations and a system of organizing our economy where you get a more equal distribution of market income. That means strengthening collective bargaining. That means strengthening labor rights. That means strengthening all sorts of institutions that actually favor a more equal distribution of profits and the fruits of economic activity, because that is the fundamental way and the fundamental level of economic distribution. And then you come to the second level, but as I said, I'm very much convinced that the first level is very, very important. And of course, the tax policy also is very important. But maybe, Joe Stiglitz, you would agree, we first have to tackle the primary distribution of market income and then come to a just tax policy.
Yeah, I agree with you. We call it pre-distribution, but there are, and I was going to add to what I said before, elements of better pre-distribution, market distribution, are, for instance, better control of monopolies. If monopolies not only garner a lot of income to the owners, but they raise prices, so they're taking money away from ordinary people. Lots of forms of market exploitation. There are, corporate governance. One of the problems, you were talking about the distribution of the income of corporations. Many CEOs say they have to get high pay in order to, because the pain of firing workers because they don't have enough money is so great, they have to be compensated for the pain of firing workers. Whereas if they didn't take that income, they wouldn't have to fire as many workers. But anyway, the point is corporate governance laws are also another example of this. One of the striking things about Germany is that its market distribution is not that much better than the United States.
That is.
Where Germany is doing well compared to the United States is in the redistribution. And I always found that very interesting, and that follows on with what you were saying, that Germany really needs to do a better job in the market distribution of income.
We have to do a better job in market distribution, because if you look how our union membership declined over the last 40 years, and we now have an organization rate of, Carsten, 20%, I think, not much more. And collective bargaining has lost a lot of its impact, and not in Bremen though. We also 56 of our workers still are in some kind of collective bargaining system, but in the whole of Germany. And so what I read in the aftermath of the financial crisis, the IMF did a report, and there was one figure I never forgot, because there was a curve showing on a worldwide scale the development of union membership, and it was since 50 years a straight down a race to the bottom. And I thought, we'll never be able to fight inequality if we're not able to change and reverse that trend. Of course, tax policy is very important, but if we have this development on a worldwide basis of union membership, and then the sort of the crisis of collective bargaining will never change on a worldwide scale the distribution of income, because on the pre-distribution level we have this big problem. And of course, then on that there's the problem with the tax system, and it's true, Germany has a pretty good record on the redistribution level of our social system and our tax system to make the distribution of market income less unequal or more equal. That is true, but of course we could do much more. And one point is what you said, Carl, the inheritance tax, because that's one of the biggest problems in our tax system, or one of the most unjust features of our tax system, because most of the big inheritances, they are not taxed at all, because we exempt the companies and what we call Betriebsvermögen, the wealth that is connected to companies, because the argument is it's used for economic purposes, so you can tax it, otherwise you will threaten the existence of the company. And with this ideology, we currently have a system where an inheritance between 50,000 and 100,000 euro is taxed more than 1 billion more in respect of the effective tax rate. And that, of course, is really, really unjust, and we should change that, and probably our constitutional court will force us to change that. But the conservatives and market liberals, they are defending the current inheritance system with to the last drop of blood, because for them that's really the core of their ideological belief.
Yeah, and part of the point is that you were mentioning that narrative about why you can't tax businesses. The media has an enormous influence on what we believe. And particularly in America, I don't know the situation in Germany, but in America, you have the Washington Post owned by Bezos. You have the Wall Street Journal owned by Murdoch. You have Twitter now X, controlled by Elon Musk. The whole media landscape is one where the billionaires, and this is true in most countries, have disproportionate voice in the public dialogue and get to articulate those particular arguments why taxing inheritances would be bad, and people come to believe it. And that's really part of the dangers of the perpetuation of wealth. It shapes the public narrative. And it's also part of of the reasons, I think, why extreme wealth inequality at the top particularly is so corrosive for democracy. It leads to ordinary individuals not trusting anything, thinking the system is rigged, because in the end they see things like people at the top not paying their fair share, and they say something's wrong here.
Yeah, there are so many twists and turns in the discussion with the effects you describe about people with a lot of money having disproportionate influence on the public discourse. You know what happens in Germany, but I think it's in a lot of countries. Over the last 30 years, more and more people think that things are unjust, not equal in our society. And they say the rich and the poor, and the gap is widening ever more. That's what most of the people believe. But then, if it comes to political consequences, there is no consensus, there is no political strategy, so you can't translate and transform this uneasiness with inequality, which is shared by so many people. We don't manage to transfer it and transform it into political action, because our public discourse is so diverse, diluted, disturbed, and twisted that you don't get that much support for a just tax strategy, for example, or for other concrete political strategies to change sort of inequality. What you get is a feeling that things are unjust, and you get ressentiment, but you don't get, well, you don't get class consciousness as well, but you don't get a sort of a political consequence or political strategy out of this feeling of things being unjust. And I suppose it's the same thing in the US and other countries as well, because people think it's not going right, but they don't draw the right conclusions out of it because they don't think it can be changed.
Go ahead.
Oh, maybe one aspect, but feel free to add to your response whatever you want to add, whatever Dr. Bovenschulte provoked to you. The feeling he just described, that people are feeling it is unjust. We also see in Germany that some people, they increasingly care about wealth inequality. They try to create awareness for this conflict of the poor or middle class against the super rich. But we also see that political parties have a rise in power who do not see a conflict between rich and poor, but who rather construct a conflict between people who have been living here or whose families have been living here for hundreds of years, versus people who have come more recently to enrich our country, our economy, our society, which is rather worrying. And maybe we're here talking about wealth inequality, and I think we all agree how much of a problem wealth inequality is, but we're a little bit frustrated that we can't seem to mobilize political majorities. And therefore the question to you, Professor Stieglitz, in your report to the G20, you proposed to create an international panel on inequality, and similar to the IPCC for climate change. Do you think that could be like a breakthrough in order to mobilize the power needed to reverse inequality in order to counter the media ownership by billionaires with facts? And are you hopeful that such an IPI, International Panel on Inequality, will be constituted?
Well, yeah, I am hopeful that it will be constituted. We're working on it very hard. We've had several meetings of governments that have indicated that we'll support it. They'll provide finance. We're working, on the best way to establish it. One of this is a side point, but an important one. I think many of us who are engaged in this also believe that if we succeed, it will show that multilateralism is still alive. That countries, not every country will join. I don't expect Trump to join, but that a large number of countries, very large number of countries, will support it. And we've gotten the support of the African Union. There is a group of countries, I think, that were together in Germany, called Democracy Forever, that 20 countries got together and supported this initiative. So between the two, we already have a large body of countries supporting it. I think the IPCC, as an independent scientific body looking at climate change, clearly overwhelmed the fossil fuel industry. The fossil fuel industry did not really want to talk about the effect that they were having on climate change. And if it had been left to the ordinary media, I think it would have been a big fight. And the IPCC would have said is, you know, the evidence is just overwhelming. There is no debate about this. You know, when I say no debate, we still have a president of the United States who thinks it's a hoax, but you know, 99% of the people in the world understand that climate change is real and it's caused by greenhouse gases. It's something that's scientifically been known for more than 125 years, that this would happen. It's a great achievement of science. That theory, as a theorist, that they predicted climate change in a way before it was detected. So I'm hopeful that by creating a scientific body with credibility, when you say that there has been these enormous increases in inequality, that here are some of the reasons, and those, you know, picking up on how has market income become more unequal, market labor income, division between labor and capital, role of monopoly power, corporate CEOs walking off with a larger share, you know, all those elements. What is the evidence on that? And by presenting it, I think that will overwhelm the stories on the other side. And a big question, for instance, they've been engaged in a debate in France on a minimum wealth tax of 2%. And it's a minimum tax where if you say you have stocks and you've paid capital gains taxes and dividend taxes, then you won't have to pay. You know, it's a 2% on your wealth. But if you're somehow engaged in one of the many ways your tax advisors have taught you to avoid taxes, you'll have to pay a 2% tax. And there are allegations that tax, as low, as minimum as it is, would result in massive migration out of France. It's the same kind of argument that you were talking. I think the evidence is overwhelming against that kind of migration, and there are many countries that have put in place measures to combat it if it were a problem, like exit taxes. So by presenting that evidence and by presenting policies which can mitigate whatever adverse effects arise, it will change the debate. It will make it, you know, available to everybody. Hopefully, even the newspapers who are owned by the billionaires, their reporters often do honest reporting, and this gives them the kind of data easily accessible that will allow them to write the story. Well, say, this is what these guys claim, but the evidence is, you know, as certified by, you know, IPI, and that's not true.
Maybe that was a really, really convincing answer on how the IPI might help, and I personally wish so much that Germany would join the IPI. Maybe I know there's still a lot of convincing work to do, but maybe to switch the topic a little bit and to reconnect another time. I mean, we're talking here being a little bit frustrated about inequality isn't tackled directly by our federal government, but there are also other measures highly influential on inequality. I think there's been a scientific finding from a year or 2 years ago that public services and public wealth have even stronger beneficial effect on inequality than like direct transfers. So there are measures apart from the tax transfer system that help. And in your report, you also stated that across all major regions, private wealth has grown significantly over the past decades, but public wealth has stagnated or declined. And that's my question to Dr. Bovenschulte here. How was the, evolution of public wealth in Germany, and what do you think about current measures? I mean, there's an elephant in the room. There's the 500 billion new infrastructure fund from last year, which is going to modernize our infrastructure. What do you make of this change in politics, and how do you look upon the future of public wealth and public services in Germany? Because they are crucial to inequality as well.
Yeah, I think these findings that are true for the world in general are true for Germany as well. If you look at the facts and figures, you see that public wealth has declined over the last 50 years, which has a lot to do with we didn't invest as much as we should have in public infrastructure. So at the moment, actually, our net invest is below zero in Germany, of public and of private as well. So we have a combined public and private net invest that is below zero, which is really a problem. But the problem with the public investment is a problem we've experienced for the last 20 years or 30 years, with a consistent going down of investment rate. And of course, that's a problem for public wealth. At the same time, private wealth has risen a lot, sometimes because it was just accumulated, sometimes because of asset inflation with it as well. So you can't only look at the figures, but these figures are compared to the gross national product, our reality. So yes, we have inflation of private wealth and a decline of public wealth. And what is even more important, I think, or at least as important, if you take the wealth, the private wealth, and put it into account of gross national product, so what is sort of the economy is able to produce within 1 year, then the ratio has changed. Yeah. So and in favor of wealth. So that is really a problem, because if the wealth in respect of gross national product grows and grows and grows, then wealth dominates economic activity even more. And of course, it wants to have interest and demands the interest from what is produced every year. So that is really a problem, and the reason why Piketty was so depressed about the possibility of inequality could be changed. And I'm glad when I read you that you said inequality is not a fate, but it's a political decision. Because when I read Piketty, I thought, well, we are doomed unless we have a war, and only when we have a war then it's able to reduce inequality. But who wants to have a war to reduce inequality? So it seems a very bad situation, and I prefer, for practical reasons, your point of view. But so I'm very much love the idea of having an equivalent to the IPCC, an International Committee of Economic Inequality, and I have my experts for the Bundesrat sitting in front of me. It might be a good idea just to have a resolution from Bremen that we need and support as Germany the building of and development of such a committee. Of course, then everyone will say, "Oh, Bream again," but I couldn't care less. That's if you have a reputation, you have to live up to it, and that's the reputation of Bream. So we should. We should give it a second thought, Nancy. Oh?
I just wanted to highlight one of the ironies is that before 2008, the financial sector had enormous influence in setting the regulations, in fact, in deregulating the financial institutions in the United States, and that their influence led to the financial crisis of 2008. What was the response to the financial crisis? Lower interest rates. What was the effect of lowering interest rates? It was an asset boom. Who benefits from the asset boom? Those who own assets. Who were the people who owned the assets? The very rich people. So the irony is the financial crisis was caused by the influence of these very rich financial institutions and rich people more generally. And who wins as a result? The same group of people. So in a way, it was, millions of Americans lost their homes, they lost their jobs, they lost a lot of their wealth. So those at the bottom suffered, and the people who caused the problem got away with having even more wealth.
So you're talking about the people who caused the problem are even accumulating wealth. Maybe first of all, because I'm asking you my question, I've got thousands more of interesting questions, but I don't want to be egoistic and not share the opportunity with you. So after my next question, I'm going to also to include you, our beloved audience, into the discussion. So please already be ready and think about questions. We've got people with microphones who will then be walking through the rows. But first, the very rich people, they are not reliant on the state. They are not reliant on public services. I mean, they can do homeschooling, they can just finance. And there was, you brought in a really provocative thesis. You wrote a book that you named The Road to Freedom. Freedom, which is rather a value that has been taken hold by conservatives or market liberals, but you argue that the real freedom is not just about having no government interference, but that true freedom means people have fair opportunities, healthcare, education, safety, a clean environment, and much more. Could you briefly summarize, what does this imply for the role of the state and the government, in order to bring maximum freedom to the people?
So, part of the idea is something I alluded to earlier, freedom to live up to your potential. That's, some ways the most important freedom. But in my book, I also, I was, the title of the book was making fun of a book by Friedrich Hayek, who got a Nobel Prize, and he wrote a book, The Road to Serfdom. And his thesis was too big of a government, the welfare state, a government that tries to keep the economy at full employment. I mean, this guy is really that too activist of government was going to lead to a totalitarian state, to serfdom. And what I argue in the book is that if you look around the world, you see authoritarian populism growing, like in the United States, in places where government's not done enough, much more than where it's done a lot. It's when they see this growing inequality on the one hand and they're not doing very well on the other, that's when there's a lack of trust, the system is rigged, and they say, somebody, they say, will you fix this? And they look to an authoritarian figure to do that. But part of the reason I looked at many of the dimensions of this concept of freedom, and just 2 points I'll make. One is that one person's freedom is another person's unfreedom. That is to say, and I was motivated in part to write this during the pandemic, my freedom not to wear a mask is going to result in your getting COVID-19, your loss of freedom to live, or not to go to a hospital, not to get the disease. And in the United States, we have this crazy idea that everybody should have the right to carry an AK-47 automatic machine gun around. That's a basic human right, they say. And again, one person's freedom is another person's unfreedom, with everybody walking around, and people actually do walk into places like everywhere, in places like Texas, into grocery stores, into a drugstore, carrying guns. We have a mass murder at least once a week, and often once a day. And what does that mean? The freedom to carry a gun has meant the loss of freedom to live. So that was first. Any civilized society needs to have a set of regulations to balance these freedoms. And the cases I just gave, it's pretty clear how I think a reasonable society would make that balance. There are other cases that are more difficult. The second point I wanted to make is that is the importance of collective action, working together as a society. And in some ways, you get this, again, conundrum that taking away somebody's freedom can actually, in more meaningful ways, enhance their freedom. So let me give you an example, again, related to COVID-19, which was that at that moment, we would have, there was a real risk that we didn't know how long that disease would last, how vicious it would be, how many people it would kill. And what saved us in the end was the development, particularly of the mRNA vaccines. But the development of those mRNA vaccines were overwhelmingly financed by government. And the existence of the mRNA platform, the basic idea, was supported by public research entirely. It was really work done at University of Pennsylvania. It was a really global effort. It was really interesting because people from all over the world were working there and contributing to this effort. And that meant, because that existed, very quickly we developed the vaccine in a matter of a couple of months. That had to be tested, but the development of the vaccine was amazing. Well, what is the point of this? Well, if we, that research cost money. And if you didn't, and money means you had to tax. Tax is a form of compulsion. It's taking away your freedom. You wanted to spend it on something else, and you are told you have to spend it. But in the end, would you rather die, or would you rather have an mRNA vaccine and live? Almost everybody would say it's better to contribute to this collective effort to have science enable all of us to live longer in a meaningful sense. That tax has expanded our freedom. And there's just so many more examples I could give that are exactly like that.
Absolutely. Those are wonderful examples. And as promised, I'm now reducing my own freedom to ask questions in order to enhance your freedom to ask questions. And please, wonderful stuff with the microphones. Maybe you can coordinate yourself and like have a view that we've got a good mixture of old and young and male and female people.
Over here, hi. Thanks. Mr. Stieglitz, over here in the back. Thank you so much. I'm wondering, in case you've been following the overall German political discussions, there's a debate going on welfare reform, healthcare reform, pensions reform, and other things. People are complaining that the economy hasn't been growing in 7 years, and so on. What is your take on the current situation in Germany overall? In case you have an opinion on that, thanks.
Well, I don't view myself as an expert on the German economy, and maybe you want to comment on that more. Let me say, I think the lack of growth, from what I've seen, has been largely a result of a couple factors. One of them is lack of aggregate demand. You know, the debt brake for a long time constrained your economy. And, you know, the basic insight of economics over the last 80 years is if you don't provide enough aggregate demand, including through public expenditures, your economy won't grow. And if you have too unequal of a society, aggregate demand will be weak because consumption is higher at middle income than it is at as a share of income than it is at the top. So that was one factor that I think that has contributed to the weakness of the German economy. The second factor that was particularly strong in the aftermath of the Russian invasion of Ukraine was that you had a system of electricity that was, where pricing was excessively linked to the price of gas. It was not a good regulatory system. And electricity is really important for the functioning of the economy. When you have prices go up like that, it can force small businesses to go into bankruptcy. It can be very disruptive to the economy. You know, you talk about what are the laws of economics or nature and what are the laws of people and society. There was no reason. There were some people who said that's economic efficiency. I thought that was nonsense. Prices can be a useful signal, but in this particular case, they were just redistributing income away from consumers, away from businesses to the producers of electricity. And Spain and Portugal had a different pricing regime, and they did better, and their growth since then has been much stronger.
Maybe two questions here in the first and the second row we are going to accumulate. Yes?
Sorry for also being male. My name is Florian Becker, Bard College, Berlin. I'll try to make this short. It seems to me, and this is by no means meant as an attack, I believe that there's a narrative here and an argument, or many arguments here, that we all share about Germany in particular. I'll just take 2 points of it. One of them is there is no wealth tax here. It exists in legislation, but it's ausgesetzt, it's not active, and the arguments against them are repeated constantly. And income, labor income, is taxed very highly. I think everybody in this room knows this, and I'm certainly not blaming Bremen for anything here. But why have social democrats maybe excepting the ones from Bremen, been so bad at making a relatively simple, compelling argument about economic inequality. And personally, I believe in this country in particular, the discussion, insofar as there is one on equality, it seems to be almost exclusively on income inequality. And even the basic facts about wealth distribution in this country are virtually unknown if you go outside this room. So why have social democrats been so bad at communicating this, and why are arguments that are made against a wealth tax, that is also for Professor Stiglitz, so easily argued against and not challenged?
Are we able to accumulate two questions, or do you want to? Then the woman in the second row, I might aggregate, and if a question is lost, I'll ask it again.
Also, at least my question to Andreas Brunschulte is linked to the question. Hello, my name is Sarah Ganta from Global Policy Forum Europe, but also from the steering group of the ECRIC Commission. Andreas Brunschulte, as you're already thinking with the experts in the first row about possible Bundesratsinitiativen, so one problem we have in Germany is that we know so little about wealth distribution. We don't have the famous Vermögensregister, the asset registry. And to my understanding, most of the data we need is with the Länder. So would that be something that maybe also the Bundesrat could look into? That is the question to you, and then not linked to the previous question, but to Joe Stiglitz, coming back to the tax discussion. There's currently a new momentum in the international arena with the UN Framework Convention on Tax. And my question to you is, what do we need to, or do we, what outcome do we need from these negotiations to make sure that this new convention, which is actually a historical process, contributes to reducing inequality, and also what role can Germany play in it? Thank you.
Yeah, interesting question, but let me reformulate it. Why didn't we, as progressive parts of society, not only the Social Democrats, but the unions, the welfare organizations, the other progressive parties, why didn't we manage to mobilize a majority at elections and in the political process in favor of a wealth tax, in favor of a better tax system, in respect of taxing labor and taxing capital, in respect of a better inheritance tax? Why weren't we able to do that? You see, I don't know if anyone, a lot of young people here, remembers the last big campaign we had on the wealth tax. It was called Umverteilen. Fair, written as fair. And it was a real huge effort 10 years ago, Carsten, 15 years ago, where we tried with a very big political movement, unions, parties, welfare organizations, to mobilize society for just tax policy. And this initiative fell flat. We didn't really were able to mobilize society for that. And that's what I described before, that we have this widespread feeling that everything is unjust and is getting always unjuster or more unjust. So if you have an opinion poll and ask whether things are all right, people say no. And the difference between rich and poor people is the gap is much too big. And then there's no political consequence coming out of it. And if you ask people, are you in favor of a wealth tax? You have 60%, 65% saying yes, and even of the Christian Democrats, a big majority says yes. And if you ask, you want a better inheritance tax, the same. But then it never, for some reason, transforms into political majorities. And that happened to the social democracy as well. Every time we campaign on that theme, we realize we don't make any political gains. It was a bit different when now the latest proposals on the inheritance tax came. That was really a couple of months ago. That was really a situation where we won over people in discussions. But I've experienced a couple of mighty campaigns that fell flat because for some reason we didn't gain really traction. And my explanation is that we have this diffuse feeling things are unjust, but that there is no discourse that really transforms that into a coherent strategy or worldview of the electorate. And so what comes out of the feeling that things are unjust and unequal is not people rooting for wealth tax, but people saying Grundsicherung muss gesenkt werden. And they are actually fighting the people who have not a lot of money with the people who have no money at all. It's the classical politics of ressentiment and not of real progressive political struggle. That's the situation we're in the moment. So it's our responsibility to change that, to transform the feeling that we are on the wrong track into a coherent political worldview in favor of wealth tax, in favor of a better tax system. And of course, our Constitutional Court didn't do us any favor when he struck down the last wealth tax with the argument that you shouldn't have a tax in addition of all taxes more than 50%. But that was, of course, not a constitutional argument. It was not a leading reason for the decision. So I'm not worried that a wealth tax would hold in front of the Constitutional Court. But we don't have no chance of a political majority for that. And inheritance tax, maybe we have this chance because the Bundesverfassungsgericht strikes down the current law. But what might happen then, we are not able to have a compromise on a new law, and then we don't have any inheritance tax at all. That's what happened with the wealth tax. It was struck down, and there was no majority for a reform, so we now have no wealth tax. And if the Constitutional Court strikes down the inheritance tax, we are not able to have a political compromise on that. No inheritance tax anymore. So I don't think that's the likely outcome, but that's the possible outcome. So let me summarize. Although the SPD is responsible for almost everything, it's not the responsibility only of the SPD that we have made no progress. And now I have to admit that in defending the SPD, I forgot what you wanted to know from me, because I'm...
Just said that, like the current, we need the federal, the states, the lender to cooperate more in order to like gather proper wealth register.
Yeah, definitely. That would be a very necessary strategy, because what we experience, that's the core of Joe Stieglitz's proposal and of everything, actually of the statutory minimum tax as well, that if you collect data and if you coordinate and if you have transparency, then you actually improve the chance of a better policy. And this cooperation, of course, would be wonderful. I'm pretty much sure, but that if we make an Antrag in the Bundesrat, we won't really get a majority for that. Well, we try.
I mean, just one remark, because there's a former governor of Bremen sitting here as well, and I remember that their party has already like, for Bremen, collected the data and asked like, who are our billionaires? What would be the revenue of our billionaire tax? Maybe like it's only the state of Bremen leading this, but there are at the moment like ideas and thoughts and concepts that are development. That just to quickly remark, Mr. Stieglitz.
So I wanted to answer your question in a couple parts. I was in the Clinton administration when, which is supposedly a democratic, social democratic administration, when Clinton supported a regressive measure, which was the reduction in the capital gains tax. And who gets capital gains? It's people at the top, and it's part of the structure where capital is taxed at lower rates than labor. We had I'll say, within the cabinet, within the administration, a very fierce fight over it. And there were two arguments that were put forward. One of them was money in politics. We need Wall Street's money to run our campaigns, and American campaigns are very, very expensive. They're, orders of magnitude. American campaigns cost in the billions of dollars. So you really need a lot of money. So it was what. So it was the money. It was a political strategy of what they call triangulation. If we can take the ground of the Republicans, then why would we're nicer than the Republicans, so they'll vote for us. As long as we, but of course we would then not be Democrats. But there were what I call closet Republicans in the Democratic administration who wanted the Democrats to become like Republicans. Then we would get the Democrat votes and the Republican votes. So there was that political strategy, and Clinton believed in that political strategy called triangulation. I thought, that was not a very good argument. And then there was one very influential economist in Treasury who argued for it, and it was basically kind of a neoliberal argument, but it was one of these things, if we just treat capital better, the economy will grow better. It was trickle-down economics. Everybody will benefit. And I think around the world, many of the social democratic parties bought into neoliberalism. It happened with Blair in the UK. It happened with Clinton in the United States. I won't go.
Schröder.
Schröder, yeah. So it was a common theme, and I think that's part of the reason that they bought into these doctrines, which actually, even at the time, had no intellectual basis. And one of the things for the IPI, I think, is to show what the research says. Just to take one example along the same lines, one of the arguments against a tax on corporate profits is it will discourage investment. But remember, corporate profits tax are taxes on the profits after you deduct the cost of labor and after you deduct the cost of capital. After you deduct it. So your investment is already deducted. So effectively, a normal return on investment is already exempt from the tax. It's the excess returns, the monopoly returns, that are all, and you want to discourage monopolies. So, if any economic analysis would say a corporation tax is actually good for the economy because it discourages monopoly power. Now let me come to the question on the UN Tax Convention. I co-chair something called ICRIT, the Independent Commission on the Reform of the International Corporate Tax System. And it has a terrible acronym. I can't even remember myself. So, but this was established around the same time that the OECD initiative to create a fair multinational tax system. Our suspicion was at that time that any proposal coming out of the OECD, which is the club of advanced countries, would not be fair to the developing countries. Even if they were invited into the room, they would not be listened to. And that's exactly what happened. The developing countries put forward their proposals. They were put aside. Oh, you guys don't know anything about economics. We do. And it was basically driven by U.S. Treasury and their views. Now, the irony, of course, is in the end, the U.S. refused to sign the agreement. And the Pillar 1, and there were 2 pillars, and the Pillar 2, they agreed to and then backed out of. So the rest of the world compromised to the U.S. position, and then the U.S. said, oh, by the way, we're not going to agree to it. So, and that's providing some of the motivation for having it in a more inclusive place, which is the UN. And that's what they're trying to do. In many ways, the good news is the US has decided not to participate. I say it's good news is it would be better news if the US participated constructively, but that's not going to happen. So given that they are not going to be constructive, letting the rest of the world try to put together a framework of fair taxation seems to me something, and there are lots of technical issues like how do you tax cross-border digital services. I don't want to say that they're easy, but we have a pretty good foundation of what would be a fair division of the profits that are generated by multinationals. And so what I'm hopeful is that that process will go forward and in a cooperative spirit where it's not, there'll be a lot of pressure from the multinationals to try to devise systems that allow them to avoid taxation. And I think it will be very important for Germany and other countries to try to make sure that that doesn't happen.
So let's do a little show of hands to see with how many questions we still have to deal. And so, of course, the audience. So there's maybe one question here, right, in the first row, and let's also accumulate questions to have a better view. It's really just male people having questions at the moment. There, we've got 1 and 2 questions. Please, both with the same.
Yeah, thank you very much. I want to pick up the discussion about the mobilization of people. And I want to ask you, Joe Stiglitz, about the developments in the US. I mean, in New York City, we have a new mayor, or you have a new mayor, and he developed impressive proposals and measures and so on. And as far as I understood, by now he got it. But will he overcome, and will this overcome in a long for a longer time? That's my first question. Then the second one, sorry, very shortly. As I read in California, there is a debate about a 5% tax for rich people or for revenues there and so on. And there, as far as I understood, it's a public motion which will be decided in the end of this year. What will happen there, and what will this do to the US? Does all this have an impact in the policies of the US or the policies of the US states or cities or other activities to mobilize people?
So 2 questions to be enriched by a third one.
Thank you. I'm Margaret Talbot. I have many questions, but limited to one. And that one refers to the multilateral system, which we haven't discussed here, but if you want to internationalize the discussion on inequality, what role do you see for them, not only the UN, but also the multilateral development banks?
I think the floor is yours.
We love Madame. And the answer is that he shows how one election at a local level can have enormous influence, not only in the United States, but around the world. It is amazing as we travel around the world how many people, his message has resonated with. In terms of American politics, his agenda that he's talked about, affordability, thinking about each of the components of how you spend your money. Of course, lack of affordability means lack of income. I mean, it's the same thing, but it's focusing on prices rather than on incomes. That's an issue that I think Trump does not want to deal with, but he won't be able to run away from. And with the price of oil, the inflation going up, people's perception of lack of affordability will become a critical issue, I think, in the coming election. So he's been extraordinarily successful in defining a political issue that will be a defining issue in the coming elections throughout the United States. I think he has also articulated a whole set of needs that we have, transport, housing, pre-K education. We don't have adequate pre-K, pre-kindergarten resources. We have a very complicated structure in New York City because many of the things that New York City would like to do have to be approved by the state. So the politics between the governor and the mayor are very complex. And the mayor before the previous mayor, Blasio, had a very difficult relationship with Cuomo, who was the governor. And many things that should have gotten done didn't. Madame has managed to develop a good relationship. Hasn't gotten everything he wanted, but has gotten funding for pre-K. He got a new tax, a pied-à-terre tax for non-resident second homes in New York, and there are a lot of people who've bought, multi-million-dollar apartments as just in case, if they have to leave Russia or they have to leave China or they have to leave Turkey or whatever country, they want a place. So they're empty. So in the middle of the city, you have a lot of empty apartments. He's got an agreement about a tax on these people who are not, are occupying space, but not contributing to the city. So that's been all to the good. In terms of a conventional mayor, he's managed to balance the budget in ways that have preserved the services that are essential. So he's prioritized things, I think, in a good way. So we're all hopeful. We understand how difficult it is. In terms of communication, which is one, he's been very effective. If any of you visit New York, You'll see him trying to tell people to sign up for pre-K education. He's out there fixing potholes in the streets, and those of you who drive around New York know that we have a lot of potholes. So he's out there, talking to the people who are providing public services and reminding people how important those public services are. So as a politician, I think he's been extraordinarily successful and thoughtful. He's very thoughtful about these issues. And he's been, very, very continuing pushing on this broad agenda. On April 15th, which is the day that we have to pay taxes, so it's tax day we call it, he organized a panel with me and Gabriel Zuckman, where we talked about how unfair the tax system was and what needed to be done about it. So it's, he's out there in many, and he participated in a really very constructive way. Now, on the issue about multilateral institutions, there are at least two aspects of that. One of the things that we hope the IPI will do will be to assess, evaluate the consequences of alternative rules of the game at the international level. So we mentioned earlier that the role that the rules of the game play in determining inequality. An important aspect of the rules of the game, for instance, are the intellectual property rules at the WTO. And the current rules resulted in vaccine apartheid and, increased inequality. We were talking before about the tax rules and the UN Convention. So all the rules have major effects on the inequality between countries and inequality within countries. And so trying to assess that. And that, when those rules are discussed, the consequences for inequality are almost never mentioned or weren't mentioned during the last 50 years. And what we want to do is bring up that will be one of the things. And that's one of the reasons why we think it's an appropriate topic for the G20 and the UN to be engaged in. Then the second obvious issue is the whole role of multilateral development banks, debt forgiveness. How do we manage the debt of the poorest countries? And obviously, again, that has enormous impact on the inequalities between countries, particularly the poorest countries. One of the striking aspects of what's happened over the last 50 years is because of the success of China and India, in some ways, global inequality has gone down. But at the same time, the disparity between Africa and the poorest countries in Africa, or the poorest countries around the world, and the richest has increased. So that highlights that you can't use simple metrics. You have to have a more nuanced picture of what is going on to really assess the impacts and what is really going on in inequality around the world.
I'm afraid and deeply sorry, but we are running out of time. Professor Stieglitz, Dr. Bovenschulte, thank you so much for this wonderful discussion. To enlighten the evening, we've each brought you a present of fine Premensian wine. But it's not only to thank to you, also thanks to you, our guests, for joining tonight's discussion, for all the bright questions. You're warmly invited to stay with us for another hour for a reception. During the panel, I already noticed the wonderful smell of food coming from the foyer back there. And also to all people following on live stream, thank you so much. And to the people who are watching this video on recap, thank you so much to dedicating your time to the truly decisive challenge of global inequality. And let me close this event with many thanks to the Bundesrat on one hand, but also to the staff of the Senate representation of Bremen who made this event possible on such a short notice. Thanks to you guys as well, and have a great evening.